Thank you for joining us for another episode of Behind the Coin, BTC. Today, I have a very special guest with us. His name is Thomas Euler, and he has created a much-needed framework for the cryptocurrency space called the Token Classification Framework. And when I came across this, I thought, this is brilliant. This is exactly what we need in this space. I spoke about this on a previous episode, is that we have problems in this space with naming, most famously Bitcoin, Bitcoin being a protocol and Bitcoin also being a currency, or the first app to run on the Bitcoin protocol. So we're having a lot of naming issues in this space. And Thomas was nice enough to volunteer a framework, which is an open source document, so you can add to it. He welcomes feedback, and today we're going to talk to him about how he came about creating this framework, and why it's important for us as a community to have the names properly classified. So welcome, Thomas. If you can just tell us and our audience a little bit about yourself, how you got into the space, how long you've been in Bitcoin.
Yeah, hi, and thank you so much for having me on the podcast. And sure, so for like the last 10 plus years, I've worked in technology consulting, and I was majorly concerned with digital business models and helping established organizations, so the good old incumbents, to find business models that work on the internet in the digital age. And the other major concern of mine was creating systems that can last, or to say it in a less abstract way, to help those organizations to become capable to deal with continuous change. And so I dabbled for a long time in the organizational and org design community, and one of the major themes there is decentralized systems, if you will. There are topics like self-organization and flat or even no hierarchies. And this naturally, those two strings, technology and new approaches to organization, naturally made me very interested in decentralized systems in general. And so I stumbled about Bitcoin very early on in 2009, probably, and was somewhat interested and took a look at it. But it really caught my eye once people started to talk about decentralized organizations or decentralized autonomous organizations. And around that time, so 3-ish years ago, I started to really do a lot of research and go to meetups and read a lot about the topic. And over the last 2 years, I would say I got progressively deeper into it. And so when it comes to the framework, I should also mention that I didn't create it alone, but we formed a group of by now 25 people, and we call that group Untitled INC. And it's, if you will, a decentralized organization of people who are in the cryptocurrency space with various backgrounds. And while I was certainly in the lead, I gathered a lot of feedback and discussed with the people to create the framework which you talked about, and which I suppose you will link to in the show notes to the podcast, right?
Yes, definitely. We will have a link so that people can see visually what we're talking about, and it very much will help you navigate the space a lot better than you probably are right now. So let's get into the framework.
Sure.
So what's the difference between a token and a cryptocurrency or a coin? Because people tend to use those interchangeably. So what's the difference, and how does your framework, map out what the differences are?
So, as you correctly said in your introduction, there is, so nomenclature on naming for things is still evolving in that field. And we try to do with the framework is to showcase that not every token, and a token I would define as a unit of accounting or a unit of account at the most basic level. And tokens have been around for a long time. If you go to a casino, right, you get a casino chip, which is also a token, but it's a physical one. And in the blockchain and cryptocurrency world, we created digital tokens that are unique because of the cryptographic elements that go into blockchain or distributed ledger technology. So, and if you ask what is the difference between a token and a cryptocurrency, which I think is one of the more interesting elements of the framework which we created, then by the definition we came up with, the major difference is that every cryptocurrency is also a token, but not every token is a cryptocurrency, because a cryptocurrency, at least by our definition, which people are free to disagree with, but comes from that it is being intended as a medium of exchange and or a store of value, and that it is basically, once Bitcoin, or when Bitcoin was created, the idea was to create a decentralized and global currency that you can use as a currency. But today there are many tokens, especially many of those that are used within networks and mainly referred to as utility tokens, which don't even attempt to necessarily function as a currency per se, even though they are also a unit of account, and they are potentially even used for payments or for transactions within a certain system, which is the network that it is supposed to enable, but not necessarily beyond that.
That's interesting, because I think what you're seeing, particularly with Ethereum, is that people are using it as a currency and consider it a currency, although perhaps that was not the intent. So how would you advise teams moving forward that are, creating their projects to, make a clear distinction between the fact that they're a token or a utility token, or do they have no control?
I think, yeah, they might have little control, but they certainly do have control. If you talk about Ether, then yes, people tend to use it as a currency in a limited regard, but I don't think that the Ethereum Foundation is pushing for Ether to be accepted in restaurants or even as a payment option in online services, even though some online services accept Ether, right? So this can be, there can certainly be hybrids, and definitely the framework as it is today might not cover every single token that is going to be out there in the future, as it's such a rapidly evolving space. But what I think is really important for the community, for projects who are starting to work on a project, and even for other people like regulators or outside decision makers who are nowadays thinking about this phase of cryptocurrencies and blockchain and how to regulate it or how to incorporate it in their business, they pretty nuanced understanding of what different types of tokens, and for that matter token-based systems, are out there. And once you do this, you are able to work in a more nuanced way on the topic you are working on, be it a new project or be it making some kind of regulation. And if you want to build a cryptocurrency that is intended as a new cryptocurrency, which many projects are, like Bitcoin is, Zcash is, Monero is, all these projects certainly qualify as a cryptocurrency because their system is designed to become that. But if you're working on the decentralized Uber or the decentralized Airbnb, because of or decentralized file sharing, then your coin doesn't necessarily or probably even shouldn't become a cryptocurrency. Because to get it to proper currency level, it would take a lot of dedicated effort. And you should educate people about where this token has its utility and even if you invest in a certain token, you should make sure that you understand the system and the context in which it is used very well, right?
Yeah, that makes perfect sense. And I think a lot of our listeners who are buying these currencies or tokens are actually speculating on them and speculating on how high they can go so that they can make a profit. Now, if you're speculating on a utility token and it keeps going higher, is that actually a disservice to the people that are using it as a utility because they're creating dApps, decentralized applications on top of those protocols. And in order to run their dApps, they need to pay the utility fee, which then is higher. So it becomes expensive for them to actually run their programs because the value of the token keeps increasing. So it's, they're different stakeholders that have different needs, and the speculators might actually be hindering the progress of projects. Am I wrong in saying
think
this?
you're hinting at a perfectly good argument. And I've just recently been talking to some people who are much more active investors in the space than I am, or at least more of the trader variety of investors. And if you want to assess the value of utility tokens, you are first of all interested in the value of the entire network and then in the velocity of the specific token. But most tokens that are being traded today don't have a platform or a network beneath them that is actually live and running, and particularly not at scale. Probably we have Ethereum at somewhat relevant scale, and that may be it. So all the other projects out there, we don't have tokens being in use. And one of those traders I was talking to, he told me he thinks one of the major things we are going to witness is that many of those tokens are massively overpriced today for exactly the reason you pointed to. Because once there's a product and once people start making payments in the network, the current pricing might backfire because it leads to pricing that isn't competitive. There might be workarounds to fix that. I mean, we know that you don't have to pay full bitcoins. You can even pay on Satoshi level, but still, it's a concern that is out there, and speculative pricing. It's not even something we cover in the framework. It's more about understanding tokens at a fundamental level. What do they do? How do they work? And what different varieties are out there? And we don't even look at pricing because for now that doesn't make a lot of sense in my point of view because the services aren't in any way mature.
Yes, and I completely agree with that. So let's go a little deeper into what the framework covers. So you cover 5 dimensions of the space, and the first one is the token's purpose, its utility, the legal status, its underlying value, and its technical layer. So explain that a little bit in terms of what you mean by the tokens. The token's purpose is obvious. Its utility, legal status. I was a little bit confused about the underlying value. So if you can talk about that a little bit more, and then its technical layer.
Yeah, sure. So when we started to look at tokens, and obviously in order to create the framework, we looked at a lot of the literature that is out there and other frameworks that try to cover and explain tokens. We quickly realized that they sometimes, so many frameworks, for instance, look at the legal aspect, and then they also talk a bit about utility, but more from the legal aspect, where you create utility tokens to avoid being classified as a security by regulators. And we try to look at all the dimensions that we thought are important to understand what a token is. So, for instance, the technical layer. You can, if you have a distributed ledger system, or usually, at least today, still a blockchain, then you can have a token that is natively implemented on the blockchain itself or on the ledger level. so on the most fundamental level of the system, if you will. But this would be the Bitcoin token, for instance, or Ether. But you also have two other different technical levels or layers on which you can implement your token, and that would be the protocol level, where, for instance, most of the projects who are built on top of the Ethereum blockchain, like, say, for instance, Augur, they have the rep token, and this is a protocol token. So it's a crypto economic protocol that is built on top of the Ethereum blockchain. So it's a different token. It's not the Ether token, but it's handled on the Ethereum blockchain. And it's a protocol because it's open, and even other applications can, at least in theory, use the protocol on which that token is implemented. So if we stick with the Augur example, what the rep token does, it enables people to set up an oracle that is used in the prediction market system that Augur is building. So if you wanted to set up an oracle for a different application, you could also use their protocol and then would use the rep token. So, and then the third layer is the decentralized application token. So it's an application built on top of a blockchain and potentially even built using different protocols. And there you create a token. So these are different varieties of tokens, and it makes sense to understand where a given token is implemented on technically, because it also means, for instance, if you build a DEP token on top of the Ethereum blockchain, then at least the startup or the issuer of that token doesn't necessarily have to build an entire blockchain itself. And building a blockchain obviously means to create the entire ecosystem of miners or validators and all the things that go in there. So from a complexity point of view, it's important to understand. For instance, then you talked about purpose. Purpose, as you said, is pretty self-evident, but there is where we differentiate between one, cryptocurrencies, which is what I explained before. It's a token that is intended as a global medium of exchange, or potentially even a local one, and that functions as a store of value. But then we also see network tokens, which are tokens that are intended to be used within one specific system or one specific network or application, and that don't aspire to become a general cryptocurrency. As I said before, nothing that you use as a means to pay for dinner in some potential future. And thirdly, there are investment tokens, which is what many of the ICOs, some of them might be considered as scammy by some people. Some, I think, are entirely legit, but where the token is primarily intended as a way to invest, usually passively, into the entity that issues the token or in an underlying asset. So it feels very much like a asset class for investment purposes primarily, because it doesn't come with a certain utility or any significant functionality. And many people take offense by that, or it might turn out to become just a new asset class. These two. So, and then I think you were wondering about the underlying value, right?
Yes. If you can go into that a little, because isn't value based on what the market gives the token?
In the current stage, I think you're totally right. But the current stage, to me, is defined by most of the tokens out there not being backed by a running network. So there is no service, nothing that is live, at least in many cases. And even if it's live, it definitely hasn't reached the scale that people, especially people who invest and speculate with the tokens, at least who do it on a more fundamental long-term perspective, think the upside is, right? So they will grow, hopefully, at least from an investor's perspective. So while the market definitely is involved, there should be a source of value. So yes, the stock price is determined by the market, but how does the market determine it? It determines it by looking at, in that case, the public company that issues the stock, and basically what is the market's expectation of the company's financial performance in the future. And that is where the stock price is derived from. And that is true for some tokens in a somewhat different way, and others work differently. So the three categories we identified are asset-backed tokens, which are sometimes also called stable coins. And these are all the tokens that you basically use as a claim on an underlying asset. So there are some examples, like, for example, gold, or we all know about US dollar Tether, or even Ripple. And these are basically IOUs. And so, at least in theory, the reason why the token has value is because there is a asset, which might be a physical asset even, that is represented by the token itself. But then, like, for instance, Bitcoin, it works totally different, and that is what we call network value tokens, where basically the value of the token is very closely tied to the value of the network in which the token is being used. And that is probably the most hardest to grasp. And to be quite honest, I don't think anybody has in its entirety, because it's basically, so what we understood during the internet age is that there is a immense value in networks. And the usual way how we build those networks is by setting up companies who create a network, or as tech analyst Ben Thompson calls it, a super aggregator. And these are the Airbnbs, the Ubers, the Facebooks in this world. But they are still companies, and they have balance sheets and quarterly reports that you can look at, and apply traditional methods of valuing it. But at least in the case of totally decentralized blockchain-based networks, I know that's a bit a long word, but I think it's kind of correct. At least in their cases, like Bitcoin, for instance, it's really the network and the utility that people derive from the network that should be reflected in the value of the token. Obviously, there can be speculative effects on that, but at least in theory, once the network has reached a certain scale, it should pretty much reflect what the utility that the network provides to people is, depending on how the token is designed in detail. So, and then last but not least, there are also share-like tokens, which is closely related to the investment tokens, which class or type that I talked about before. Where, for instance, there are certain tokens around, even though they might be somewhat questionable from a legal perspective, who pay dividends or give you profit shares, or even represent proper equity, even though most jurisdictions don't have a proper framework to do so. But there is the LKK token. I don't know if you heard about that. It was given out by I think, Swiss company called Lücke, and they did this. So and then it's just like a shares. That is underlying value. Does it make sense?
Yes, that does make sense. I think there's another token that did that very early on called Blockchain Capital, BCAP. The BCAP token also did that. So yeah, there are a few of them out there, but there doesn't seem to be that many share-like tokens yet because of the regulatory issues. Okay, so that makes perfect sense what you described. You also go into you break down the DLT system as well, distributed ledger technology system, I'm assuming that means, into 3 layers. And the first layer is the governance layer, the second is the token, and the third is the technology. And I thought that these were interesting stacks because there's a lot of overlap between these various stacks. And for example, when I first looked at it, I noticed that you had consensus protocol in the technology stack, which makes perfect sense. But to me, the consensus protocol has a lot to do with the governance layer as well, though those two to me overlap because some tokens lack of proper governance structure built into their technology. So my question is, which layer do you think is the most critical to the success of a project? Do you think a token or a coin can be successful with a strong token, layer, technology layer without the governance? And perhaps maybe you can even explain a little bit about, for our listeners, so that they understand what you mean by these three layers.
Yeah, so your observation that those two overlap is totally correct. And if I talk about the framework, I sometimes refer to the governance layer as like the human layer of the system. So first of all, to begin with, if you look at distributed ledger or blockchain systems, then they are systems, which means you can't look at only, for instance, the token in isolation, but you need to understand how they work, how they behave, how they can evolve to become successful networks or systems in the end. So, and the technology layer obviously is pretty much self-evident. It's all the technology at the core of the system. And the token layer, that in the visual that people can see if they follow the link below, is in the middle. And it's in the middle for a reason, because the token layer in many regards is the bridge between governance and technology, as you correctly said, right? There is, on a technical level, there is a consensus mechanism, and the token, the blockchain native token, plays a critical role in creating that mechanism itself, and it is used by participants of the network, by stakeholders of the network. And so that is certainly critical for some part of the governance. However, there is one critical problem, even though there are people who proclaim things like code is law. The problem is you can't predict everything. And therefore you can't write code, especially in the beginning, once you build a new system that covers every future potential scenario. And we've witnessed that when it comes to Bitcoin just recently, when it comes to the scaling and the SegWit to X debate, where the Bitcoin protocol didn't help a lot with aligning all the different stakeholders and participants, but it was necessary to have a off-chain decision-making process where all the stakeholders, like the core developers, like the big miners, the big mining pools, and others, find a solution. But I think one of the most critical problems, at least from my perspective, some people might regard it as a feature, is the total lack of any clearly defined processes how to make those decisions. And if you want to build a good system, especially a decentralized one, then you need some kind of governance system to handle those kinds of decisions, which you can't handle on the protocol level. And that is basically why the governance layer is, I think, of critical importance, even though we see some cases like Bitcoin where it's not very much formalized. And obviously, other points that are referenced by this layer are like the legal entity. Which legal entity is issuing the token? Which legal entity is building the code, if there is one at all? How do you include token holders, right? Especially if you have many of those ICO projects that are run by more traditional companies and startups who, if you want to say it in a critical way, just put a token somehow inside there, then as a potential investor or token buyer, I would be pretty much interested in how I can influence future decisions, if at all, and how will my voice be heard. And that even comes down to very basic but very critical stuff like what is the community infrastructure we are using? How can people in our community and in particular token holders communicate? And yeah, the token layer basically includes all the aspects that you have to think about when you design or build or analyze a token, like what is the utility, what are the rights you have as a token holder, what type of token is it? So that is obviously referring to the different dimensions in our framework. How does value distribution work in the network? How is supply and inflation handled, and obviously what is the legal status of the token. And the technology layer includes all the questions around what is the blockchain, the ledger architecture. I mean, we see more and more experimental or new designs, be it the Tangle by IOTA or others. We need to assess the protocol code or make sure that we build solid protocol code. How do we handle validation? There are many projects that want to build proof of stake instead of proof of work algorithms. How do they work in detail? There is so much experimentation to be done, so that for whatever reason you look at such a system, you definitely need to assess those.
Yes.
And code and contract security, obviously.
Right. Yeah. I think that we're so early in this space that a lot of teams are realizing there's a lot of things that they've overlooked. And the beauty of this space is because it's open source, people can learn from the mistakes of other teams. And so they can say, oh, okay, we've got to make sure we put in a really strong governance mechanism. And I think even coins and teams that have put built-in governance mechanisms are also finding that they've overlooked certain things because there is a human element that we can't escape. I think the utopian view that the machines are going to take care of everything, and I think what we've seen with Bitcoin is that you can have over consensus. There's such a thing. Too much of a good thing is not necessarily a good thing, and so we have this system where everybody gets a say. And we're kind of having to work through that and realize that, we still have to have some form of centralization, which is a bad word in this space. You say centralization and people freak out.
Yeah, or even,
but I think,
or even so, going back to my past in organizational design and working with big corporations and also looking at startups who try to do stuff hierarchy free and in a much more decentralized way, if you will. There is a lot of experimentation these days going on in the field of not making decisions in the traditional hierarchical and centralized way. And I think this is a very complementary discipline to look at if you want to build proper decentralized systems. And there is a lot to be learned from both disciplines. And I think there is a decent overlap even today between people who are in both communities. And if you look at people who are active in the DAO or decentralized organization field, then you don't need centralization, but you need clearly defined. So in the past, I would have called it processes. Today, I would probably refer to it as protocols. So if you don't have one clearly defined decision maker, then at least everybody who is part of the network or the system needs to know how decisions are being made and what the process is that they need to run through. And if you clearly and explicitly define this and line out how it is going to work in our system, then you have much better chances of being capable of evolving as a system in the future. Because I don't think the solution is that everybody who disagrees always makes a hard fork and start. It's a valid way, and it's kind of an evolutionary approach, and we see it in particular with Bitcoin these days. But there are probably smarter ways, and I think we are going to see them going forward. More and more people think about this.
Yeah, definitely. I mean, think of it as language. When we first, as a species, started developing language, there had to be some sort of central planning to how we were going to, create syntax and create grammar and you have to have certain rules. And so I'm glad that you used the whole term protocol. I think if people can look at governance also as a protocol, and not just look at the sort of technical aspects, but also look at the terminology, the language, and the things that are less code based. If they can all look at it as running a protocol, so that we can have a consensus and an understanding, that would go a long way. And I think that there will be a lot of sort of cross-pollination between, the things that have worked for centralized systems and the things that are working for decentralization. So I hope people are a bit more open-minded about, taking what's worked for us in the past, and looking at history and sort of developing their solutions based on what's actually worked, and not having to reinvent the wheel. Because you see some of these new projects and, it's like, what are they doing? And which brings me to the next question, which is, are there projects that you see that you think, based on what you know and based on this framework, you think, what are they thinking? I mean, this is completely overly ambitious. And it's not, and they're probably well-intentioned, but based on the framework and what we know, this will never work, at least not in the next 50 years. I mean, are there projects that stand out to you?
Well, so first of all, there are so many projects, especially when it comes to the ICO stage of projects, that I would say probably 90% of them are likely not going to work out to various reasons. But I don't want to shame any particular projects, and I don't even know that the framework makes me. So I can tell you more generally. If I look at either the token classification or the module that we just talked about before, when it comes to the DLT system layers, and I see a project that is, for instance, totally lacking any hint at governance, and I refer to off-chain governance in particular. And I don't get any idea how they want to make decisions, how they include token holders, and they either appear to be totally centralized companies to make all the decisions, then I think they are going to have a hard time going forward. And you can find many projects that fit that criteria. But even if they say, okay, we are a decentralized organization, in particular, in that case, I think it's super important that they take a stance and clearly line out how they want to make decisions. And I don't expect any project to give the definitive answer, because it's such a new field. We build companies for centuries now, and we know how to run centralized organizations, and making decentralized organizations and networks is a much newer field, and there needs to be a lot of experimentation in the process. But I want people who take that approach to build a fully decentralized or even distributed system to give me an outline of how they intend to tackle these problems, because we've seen so many projects fail at it. And if you look at technology, I mean, I'm the kind of person, I read white papers, and I really love digging deep in technical white papers. And there is, to give you a good example, when it comes to Polkadot, which is a project I suppose many of your listeners are aware of. It was a very detailed and very mature white paper and technical paper that made even me, I'm not a coder, I understand technology and I understand how these things work, but I'm more interested on the systemic design. And they lined out very clearly how their system is going to work. And in addition, it made sense to me. So this is the level of detail that I expect. That doesn't necessarily mean that ICOs or projects that don't provide that information at ICO stage won't succeed, especially when it comes to the short-term valuation during the ICO. I mean, you probably are aware of many critical voices regarding Telegram, which is a 132-page white paper, which I haven't read so far. But many people I trust called it as not very sufficient when it comes to laying out how they want to solve all the hard technical problems which they claim to take care of post ICO. And that certainly is one thing that would raise red flags with me.
Interesting.
And what I always try to do is I try to understand the crypto economy or the token economy that evolves. And I've recently studied a white paper. I won't name the project who did it, but it was pretty much clear after thinking about it for a couple of minutes that it's basically just a traditional company that gives out some tokens, and the token flow is always going back to the issuing company. Right, it was the typical. We do some kind of network, and it's obviously labeled decentralized. But what happens is you pay all your service fees to the issuing company in the token. Then they need to redistribute the token to users so they can pay fees going forward. And that I don't think is a very, very decentralized economy. And for that reason, it still might work if the system becomes highly, it reaches scale. But what it isn't going to do is create a great incentive scheme for early users and others. And this is what tokens should do, right? They should help you to overcome the problem that every new network is facing, which is kind of a chicken and egg problem. So how do I get people to adapt my network and use my network? And a good system has a token design that tackles this problem and helps to overcome it.
This when I came across your framework, one of the things that really made me started thinking about, and based on what you just said, is that are the dApps, which is the decentralized apps, are they ahead of themselves? Meaning, should we really be focusing on the network protocols and the lower layer blockchains, the people that are actually creating the infrastructure? So should we be focusing on the infrastructure before looking at what's being built on top of it? Are we ahead of ourselves?
Well, I think that is a difficult question and not necessarily one where you can give a yes or no answer to. So what is definitely correct is that the underlying technology, so blockchains or similar distributed ledger technology, still faces many fundamental problems, and the major problem is scalability, which under itself has a bunch of different hard technical problems that need to be solved. So for that reason, it definitely is important that going forward we still invest resources and time into building this fundamental technology. At the same time, I think there is a good argument to be made for even looking for applications and use cases in the real world that drive adoption. And if you don't do this and only build nice fundamental technology, but nobody is adapting it and using it, people will lose interest in in spending the resources necessary to improve the underlying technology. So I think it's pretty much necessary to do both, right? So if CryptoKitties is the major use case for blockchain in 1 or 2 years, then people will wonder if it's necessary to build very robust and highly scalable DLT systems. And therefore, I think both are legit fields.
Okay, wonderful. And so based on your framework and what you're seeing in the space, what type of fields of study do you see emerging in this space?
So this, I think what I see emerging in the next stage is definitely one stream that looks at decentralized systems that are based on top of blockchains or token-based systems, call it as you may, and tries to create an entire language for it, and also tries to define and work out the logic behind them. Because going back to your question about underlying value and the network tokens that I talked about before, I think we never had a thing that was, on the one hand, an asset class, on the other hand, something you use within a technological system that is at least intended to be used by many people at scale, and that is also used to align incentives between all the actors in those systems, while again having an economic and financial value. This is very new, and people even today start to look at what does it mean, how is it going to work, and more people will look at it and research it and create the clarity. Because I really think while there is a certain trend, as because of the Bitcoin craze of the late 2017, more and more people who never fundamentally looked at the field started investing there. Like many people started to buy early internet company stocks, but people didn't really understand what they are getting into. And what you always see in emerging fields is you have a first cycle where people use the technology, but basically build things using the logic of the old world, of old systems. But that didn't work too well on the internet, right? So if we look at search engines, to make it more specific, we had Yahoo, who took the approach of building a catalog or a telephone book, if you will, by hand. And then it took Google, who understood that there are all those different things like links and data that is being created that you can use to build a much better directory. And you find many of these examples in the history of technology. And I think the same is going to happen here. And it's at basically the overlap between system designers, then people in economics and technology, and these really merge in those fields, and of course the organizational design and decision making community. So you might call it management theory, and there is a lot of overlap, and it's a really interesting field for everybody who is in either discipline to work and figure out how something that is very much new in the history of mankind, how to make it work.
Yeah, it's exciting. It's very exciting. So what are you working on right now that you're excited about, that you'd like to share with us? Are there any projects you're working on that you'd like to share with the audience?
Yeah, so the one thing I'm doing is the network I mentioned in the beginning, Untitled INC, is very much dear to me, as I was one of the first people in there. And what we are trying to do there is we build this decentralized network of people who are in the space, very knowledgeable in it. And first of all, we build it as a network, right? We have a Slack channel at our core, and then we meet up regularly or have many calls, and we share our knowledge, and we also do projects together for client work. Or at least that is one of the things we are doing. And what is really exciting me is that it is still, even though we are 10 years into blockchain, it is still a very tiny community compared to others. And it's really easy to meet people and to get to know people. And what I enjoy about this is the fact that you can still get a hold of very talented people. So if you out there are listening and you want to join a community of people with very various backgrounds, we have people from consulting, people from venture capital, people who started to invest early on in cryptocurrency, then this network might be of interest to you. So, and the other string that we are pursuing is building businesses in the space. And without going in too much detail, at least for now, the one bigger problem that I'm currently very much concerned with is that due to the hype and due to the lack of regulation, which even definitely has positive aspects, but there are many people getting into this field right now who don't have, let's call it, the most sincerest of intentions, but really are in there for the quick buck. And I think what the ecosystem really needs is more transparency, and what the ecosystem needs is more people who provide unbiased information that is reliable and not created with lots and lots of conflict of interest that the people who provide that information are concerned with. And I think it is a much better alternative to from within the community, make sure that we reach certain standards of trustworthiness and reliability, instead of relying on regulators who often don't understand the field in detail. So this is a concern, and we are working on solutions to tackle this problem.
Wonderful.
Let's leave it at that for now.
Okay, so where can people find you if they want to get in touch with you? Give us your website and how they can reach you.
So to reach me, I would refer you to Twitter. My handle there is Thomas E. No spaces in there. And you can also find me on Medium if you search for Thomas Euler, which is spelled Euler. And you can also check out the Untitled INC website, which you find at Untitled-INC, so INC. Or no, you told me it's Untitled-INC, right?
Yes.
Yeah, Untitled-INC.com.
And we'll have all of the links in the show notes as well, so that it will be a lot easier for you to get in touch with him. So thank you so much, Thomas. It was a pleasure speaking with you. We learned a lot, and we'll definitely have you back once, because I'm sure this model will keep building on itself, and we'd love to have you back later to tell us, the new things that you've added. So thank you again, and thank you, listeners, for joining us. Have a wonderful week, and I'll see you next week. Bye-bye.